45% of you think it's going to be higher by the end of the year. Let's ask you about the Dow. For the Dow, just read US markets generally, okay? And that pulls up. So take a picture of this, and that'll sort of give you an idea of your checklist. It's a pretty useful checklist because most people are procrastinating. They just don't pull the trigger on their bloody pensions. They just, I mean, it's admin. I get it. It doesn't have to be pension. It could just be a general investment account with a stockbroker. It doesn't have to be pensions. I'm just happening to mention pensions as a vehicle in which you hold stocks or funds. The other thing I want you to watch out for is this little checklist that I made. Just ask whoever your IFA wealth fund manager is all of these questions, okay? These are the things to ask them, and those are the action steps, all right? Get your latest pension statement for these fees, ask them. They've got to provide you this. They'll bury it in page 55, footnote 67, sub footnote D, paragraph A, okay? But ask them for that, please, 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 please. We're going to get these printed out, which is why it's got a WhatsApp number on it and a schedule a call thing, because we're going to get these printed out and just generally hand them out to people, maybe even on the street. I don't know. Maybe even do little posters. You can stick them up at home. I might even put it around my home, so whenever we get a guest, we say, hey, listen, do you know this? Have you done this? Okay, so let me continue with some of these problems and solutions issues, okay? In particular, stocks and portfolios. Let's look at those and how do you know when to exit and risk. Now, one of the biggest problems I've always mentioned to you all is people don't know how to buy stocks. Okay, this is what most people's portfolios will look like, either through a fund manager, an IFA wealth manager. I mean, basically it's spray and pray. Just buy a bit of everything so that you can, if a fund manager does it, they do it so they've got something on marketing literature to tell you each month and say, oh, well, this one went well. Well, of course it did, because you've got every single bloody stock in the market. One of them's bound to do well, isn't it? And if it's private investors, they do it because they've got FOMO. Others, it's completely empty. And the reason it's completely empty is because they just don't know what to do. And they don't know that all you do online, the way you do online banking, you can do online stock buying, okay? So I'll explain that. Now, for me, I've shown this before, it's really between this number of stocks. Now, it's very simple. We have, what we give clients is sort of a risk appetite diagram. And if you're more risk averse, you might hold more low volatility funds, exchange trade funds, okay, which, like, let's say a low volatility one, not necessarily the S&P 500, but something like that, okay? And you might hold more cash, maybe 20, 30, 40% of cash, maybe 2 years requirements of cash, okay? That's if you're more risk. If you're more risk loving, like a 20-year-old, you're probably going to have closer to this number of stocks. The reason fund managers are so rubbish at their jobs is, first of all, they spray and pray. That's one reason, okay? They just hold